What if I told you that in a market full of uncertainty, 3 companies are absolutely crushing it right now? We're talking about returns that could actually make your portfolio the envy of every investor you know. NVIDIA just hit a new all-time high and is becoming the world's most valuable company again. Microsoft AI business is now generating $13 billion annually. That's a 175% increase in 1 year. And while everyone's chasing the latest meme stock, there's a utility company quietly compounding dividends at 10% annually for nearly 3 decades. I'm about to break down why these 3 stocks, NVIDIA, Microsoft, and NextEra Energy, represent the ultimate trifecta for 2025 and beyond. By the end of this video, you'll understand exactly why Wall Street analysts are calling these strong buys, and you can position yourself for the next wave of wealth creation. But first, as always, smash that like button and subscribe here, because on this channel, we like to talk business, stocks, investing, and tech. And so if you like that and you think this is something you might be interested in, go ahead and follow me. Now, the big picture, why these 3? What most investors are missing, the market isn't just rewarding any tech company anymore. We're seeing a massive shift toward 3 specific themes that are creating generational wealth opportunities. The first pillar, AI infrastructure dominance. We're not in some AI bubble. We're in the early stages of the largest technological shift since the internet. Global IT spending is forecasted to hit 9.3% growth in 2025, with generative AI growing at a staggering 29% annually through 2028. Second pillar, cloud platform monopolization. The companies that control the cloud platforms aren't just selling storage anymore. They're selling the future of how every business operates. Microsoft's cloud revenue just hit $42.4 billion in a single quarter, which is crazy. And last but not least, the third pillar, clean energy revolution. And here's what no one's talking about. AI data centers are absolutely massive energy consumers. Bloomberg projects we need 450 gigawatts of new US capacity by 2030. And that's not just about climate change, it's about powering the AI revolution. The companies that control these 3 pillars are essentially building the infrastructure for the next 20 years of economic growth. And today, I'm going to show you exactly which 3 companies have the strongest moats, the best execution, and the most explosive potential for growth. Let's start with the elephant in the room. Of course, everyone heard the NVIDIA. And before you say that, let me show you why this stock is just now getting started, even with all the success that I've had the past couple of years. Like I said earlier in the video, they hit a new high, making it the world's most valuable company again with $3.7 trillion market cap. And of course, since recording this video, it has grown since then. That's bigger than Microsoft, bigger than Apple. But of course, here's the kicker. Analysts still see an aggressive upside with price targets as high as $250 per share. This is not financial advice, but as you can look at the stock price currently as of right now, it's pretty far from $250. So you have some time to get in before, it decides to reverse. And as always, the numbers don't lie. In Q1 of 2025, revenue was up $44.1 billion, up 69% year over year. The data center revenue alone was $39.1 billion. Free cash flow margin over 40%. The backlog more than 1 full year production. But here's what makes NVIDIA truly unstoppable. It's not just about chips anymore. NVIDIA has built what we call the AI operating system. Their CUDA software platform, combined with the networking technology from the Mellanox acquisition, creates an ecosystem that's nearly impossible to replace. When AMD or other competitors try to compete on hardware, they're missing the software side of things that NVIDIA took over a decade to build. Next, the Blackwell architecture launch is already showing unprecedented demand. We're talking about chips that deliver 4x the performance of the previous generation. Loop Capital just raised their price target to $250, making them the most bullish firm on Wall Street. And of course, yes, when it comes to China, there are export restrictions, but here's the plot twist. It's actually helping NVIDIA. The company took a $4.5 billion charge from China-specific H20 inventory, but this forced diversification is making them stronger. They're now focusing on demand, which is absolutely exploding. And why this stock would double is with a forward PE of 53, NVIDIA looks expensive until you realize they're growing earnings at 65% annually. And the AI infrastructure build out, we're still in let's call it inning 2 of a 9-inning game. So they're just getting started. Now, let's talk a little bit about Microsoft, the company that's quietly becoming the most important AI player in the world. While everyone was watching NVIDIA's hardware dominance, Microsoft built something even more valuable, the software layer that turns AI into actual business value. Their AI business just surpassed $13 billion of revenue, growing 175% year over year. In Q3, the Azure revenue was up over 33% year over year. AI services contribution, 16% points of that growth. And of course, with the cloud segment, $26.8 billion in quarterly revenue. But here's what's really exciting. Microsoft just announced their vision for the open agentic web at Build for 2025. Think of it as HTML for AI agents. They're not just participating in the AI revolution, they're defining exactly how it works. More so, Microsoft's 365 Copilot isn't just a fancy chatbot, it's fundamentally changing how work gets done. Management is targeting 70% attach rate among enterprise customers at $30 per user per month. That's a massive recurring revenue. And with Microsoft spending $80 billion in AI infrastructure this year, that's not just buying computers, they're building the foundation for the next decade of computing. Amy Hood, their CFO, even admitted they expect AI capacity constraints beyond June because demand is so intense. And yes, there's tension with OpenAI currently, but here's why it doesn't matter. Microsoft has already extracted the core value. They have the models, the infrastructure, and most importantly, the customer relationships. Even if OpenAI walks away tomorrow, Microsoft still wins. And out of 38.8 forward earnings, Microsoft trades at a premium, but it's justified. They're growing free cash flow at 25% annually while maintaining a fortress balance sheet with net cash and AAA credit rating. Microsoft is becoming the operating system for AI in enterprise. Once businesses integrate Copilot into their workflows, switching costs becomes, enormous. This is recurring revenue on steroids. And last but not least, here's where things get really interesting. While everyone's chasing the next AI moonshot, there's a utility company that's been quietly compounding wealth for decades, and it's about to hit a massive growth inflection point. NextEra Energy, ticker NEE, has increased its dividend for 29 consecutive years, currently yielding 3.2%. But this isn't your grandfather's boring utility stock, right? Remember all those data centers that NVIDIA chips and Microsoft clouds run on? They need massive amounts of electricity. NextEra is the largest renewable energy company in the world, with 28 gigawatt contracted backlog of wind, solar, and storage projects. They have the capacity to help these companies scale at a very fast rate. Their regulated utility Florida Power and Light serves 6 million customer accounts in one of the fastest growing states in America. Population growth plus AI data center demand equals perfect storm for electricity demand. Now let's talk about the numbers. Their adjusted EPS growth of 8% in 2024. It had a dividend growth target of 10% annually through 2026, and the current yield is 3.2% with a payout ratio of 59%. Plenty room for growth, and this is why it works. While tech stocks can be volatile, utilities provide steady cash flows backed by regulation. But NextEra isn't just a utility, they're positioned at the intersection of clean energy and AI infrastructure demand. With recent policy changes favoring domestic energy production, NextEra's US-focused renewable projects are becoming even more valuable. Less than 0.2% of their $75 billion capex has tariff exposure. So Trump's tariffs aren't really going to hurt them that much. Trading at 19x 2026 earnings versus a 5-year average of 26, NextEra is actually trading at a discount right now. Despite having superior growth prospects, if you reinvest those dividends, you're looking at a total return machine. Dividend has compounded at a roughly 10% annually, and management is confident they can maintain this through 2026. So how do you actually invest in this trifecta? Here's a strategic approach that makes absolute sense. And again, this is not investment advice. This is just what I'm going to be doing to make things, allow me to be able to win within the market as well. 3% NVIDIA for explosive growth, of course, right? 3% Microsoft for platform dominance, 3% NextEra for income stability. Why the equal weight? This gives you exposure to 3 different risk profiles while limiting concentration risk. You get growth, income, and defensive characteristics. When it comes to dollar cost averaging, NVIDIA's volatility makes it perfect for stage entries. Use dollar cost averaging over the next 3 to 6 months to help build position over time. And when it comes to dividends from NextEra, they automatically reinvest for you. This compounds your returns and builds a position during market downturns. Now, this isn't a day trading strategy, of course. These positions are designed for a 3 to 5 year period of holding to capture the full AI infrastructure build-out cycle. Set stop losses, for 20%, whatever you may be. Some people may have more risk tolerance, and that's perfectly fine. I'm one of those people. I'm cool with holding, as long as possible, just because, especially if I'm truly believe in the company, just sometimes I'll never sell. With that being said, do have some earnings coming up, and here's why right now is such an interesting entry point. When it comes to NVIDIA, the Blackwell shipments are ramping up. The data center capex cycle is just beginning, and growing software attach rates at 55% gross margins. When it comes to Microsoft, the Copilot adoption accelerating, potential dividend increase in September, of course, and when it comes to their cloud platform Azure AI capacity expansion. So these are things that's taking Microsoft to the next level. And lastly, when it comes to NextEra, the Florida rate case approval expected late 2025, IRA tax credit monetization, and peak treasury yields creating REIT-light multiple expansion. We're seeing institutionals buying at these levels. Matter of fact, BlackRock just increased their NVIDIA position, and Microsoft Insider are selling has actually decreased. That's a bullish signal. And let me show you exactly what I mean by that. So look at NVIDIA here. Didn't have the best day, obviously, but come down here and look at the analyst ratings. They have a buy. 90% of the 67 ratings coming in from analysts have a buy. If you don't see this and think, oh, maybe I should get into it, I don't know what to tell you. These are people who are on Wall Street who get paid to make decisions like this. And obviously, people are loving what they're seeing right now. That's just NVIDIA. Now let's talk about Microsoft as well. Come down here. Same thing. 92% of the 65 ratings are giving a buy rating. And lastly, it's not as high as the Microsoft and NVIDIA's in terms of the 90% buy ratings. But as you can see here, 63% are still saying buy, right? So these analysts are obviously seeing something that's going on within these companies. I don't want to blow smoke. These guys know what they're doing, and I like to follow the money. That's what I tend to do, because these people are much smarter than me when it comes to this. And so that's why I think it's the right thing to do as well. With all that being said, right? Inflation is cooling down. The Fed is potentially going to cut rates again later this year, and GrowthStocks should benefit while utilities get multiple expansion. So let's be real, no investment here is risk-free. Here's what kind of can go wrong. When it comes to NVIDIA, the export restriction expansion can possibly slow things down for them, and competition from Silicon Valley can really make things a little bit harder for them. With that being said though, I still very much believe in the capacity of NVIDIA. I mean, look at the growth they've had over these past couple of years due to their leadership within the company. I don't think that this would be something that would actually have to worry about a lot. Now, when it comes to Microsoft, the OpenAI partnership deterioration, that is something that could play a factor for them as well. But when it comes to the cloud competition, that's also intensifying as well. So there's a number of different things with Microsoft that could also hurt them, but as we have seen again from their last earnings reports, they are absolutely crushing it, and I don't see this being a major bump and roll for them either. Lastly, NextEra, when it comes to the interest rate sensitivity, regulatory changes to renewable incentives, weather-related operational disruptions, and things like that, right? So I'll just recommend you guys pay attention to these things and make sure that this is something that you guys can swallow and be able to, take care of and just pretty much ride the wave and see what goes from there, right? But the bottom line is AI infrastructure, cloud platform, and clean energy aren't just trends, they're the foundation of the next economic era. NVIDIA gives you pure play of AI dominance with explosive growth. Microsoft provides diversified AI exposure with platinum durability, and NextEra delivers income and clean energy exposure with surprising growth. Together, these three stocks in your portfolio position you for the three most important themes of the next decade. And as always, it's not financial advice. Do your own research and understand your risk tolerance as well. But if you enjoyed this video, please share with your friends, like and subscribe, and please continue to come back for more because I love doing this. I'm just getting started, and I just had a baby girl as well. As you can see, my girl dad hat on. So I hope I can do this a little bit more for you guys as well if you did enjoy it. Thank you so much, and see you guys soon.